Shadow of Truth with your host Dave Kransler from InvestmentResearchDynamics.com and Rory Hall from thedailycoin.org. Today is Thursday, May the 14th, 2015, and we have a special guest today, Mr. Alasdair Macleod from goldmoney.com.
What's going on today, Rory?
Oh, just about everything. Just watching the markets, trying to put everything together and put together a good show.
I'm a little encouraged here by gold and silver. This is kind of the fourth trading day in a row that gold and silver have been moving higher ever since mid-morning on Monday. And I'll be anxious to hear Alasdair Macleod's take on that. I'm still a little bit dismayed that the S&P 500 seems to keep going higher regardless of the economic news. We had a really bad piece of earnings announcement from Kansas City Southern this morning where they essentially withdrew all of their revenue and earnings guidance for 2015, and so many words said their business is terrible. The railroad business is sort of like the domestic business activity metric that the Baltic Dry Index would be as a global business metric, in that transportation and rail transportation business in particular is sort of tells you the heartbeat of the economy. And what Kansas City Southern basically said today is that the economy is in bad shape right now.
Wolf Richter wrote an article this morning called What's Going On with the Trucking Industry, and where he was looking at specifically the long haul, and apparently that's falling off a cliff as well, which is another indicator of just how bad it is, which that shows domestic, like what you were saying as far as the rail movement. It's the same thing, just in a different way, but it basically says the same thing. It shows exactly what you and I have been showing on a global scale. It brings it home, though, and says there's no way. And Eric King over at King World News put out a piece this morning also where he pulled all these Wall Street Journal charts showing, and the most telling one to me was the first quarter adjustment on the GDP, inflation adjusted, shows a negative 1% growth for the first quarter of this year. That's according to the Wall Street Journal.
Yeah, well, I'd make a friendly bet that when the Bureau of Economic Analysis releases their final revision of Q1, they're probably not going to show negative growth.
Yeah, I wouldn't touch that bet because.
And what's hilarious is that in our Orwellian world that's been created by the central planners here in this country, despite all this bad news, bad economic news, and specifically with regard to the transportation sector, the Dow Jones Transport's up almost 0.5% today.
Well, that makes perfect sense.
Yeah. You know, if companies are going to start earning a lot less, you may as well buy their stock.
Exactly.
Well, I'm anxious to hear from our guest, Alasdair Macleod, today, especially with regard to what he might have to say about what's going on in the precious metals market. How about you?
Let's see if we can get him on the line.
Hello, Rory.
Good morning, Alasdair. How are you today?
I'm very well, and how are you?
I'm doing all right. We have Dave Kransler on the line as well.
Oh, that's nice. Hello, Dave.
How you doing, Alasdair?
I'm doing fine, thanks. And you?
I'm well, thank you. Great chatting with you again.
Yeah, it's good. It's good. It's actually quite a good time, I think, too. The market's looking a bit better.
Yes, that's exactly where we wanted to start. Is these last 3 or 4 days. I think Dave's got something he wanted to ask you about.
Well, I assume here you're referencing the precious metals market.
I am indeed. Yep.
You can tell because he's got that little chipper sound in his voice.
I think we all do. It's highly unusual. Yes. Essentially, the precious metals have been moving higher since mid-morning on Monday, and it's highly unusual for the central planners to allow the precious metals to have a 3-day rally like this. Really, it's almost a 4-day rally. What do you make of it, Alasdair?
Well, I think you've basically said it all. The problem from the central planner's point of view is that confidence in the economy is the one thing that's so important to them. And they've now got the problem that bonds and equities have sort of gone so far. Everybody must be tempted increasingly to cash in some chips. They don't like people doing that because that shows that that the confidence is waning. And gold, of course, is the other side of this. The last thing they want to see is gold and silver going up. Because that implies a lack of or a diminishing amount of trust in the system. So, yeah, no, I think you're right, Dave. It's something they don't like, but I don't think it's something that they can control forever. And so this move is interesting from that point of view.
And very healthy, it looks like, also.
It feels very strong underneath, I must say. It really does. I saw there was good volume on COMEX yesterday on that rise, and that tells me that there's some genuine buying going in there, which is a good thing to see.
Not just short covering?
No, it's more. If it was short covering, you would see the open interest would fall. The open interest took a big jump yesterday. We haven't got the final figures yet, or at least when I last looked, they weren't up. But it looked like there was quite a jump in open interest, and that tells me that people are opening new bull positions.
Yeah, if anything, Alasdair, you're right. The final open interest numbers aren't out yet, but on the assumption that they're going to show a pretty healthy jump, if anything, it shows the extent to which the bullion banks were trying to feed paper into the market to try and cap the move.
Yeah, I think that's right. So it feels good underneath, and I think the other thing is that we saw signs. I think there was a sort of the co-basis. There was a bit of a backwardation in London earlier this week and last week, and that rather indicated that we were in for a bit of a run, and it's now materializing, which is good.
So I was exchanging emails yesterday with John Embry, and he wrote something that really kind of it struck home hard, and I agree with him. And let me just read an excerpt from the quote he sent me, and I have his permission to publish it, and then get your reaction to it. He said, "I think we are fairly close to a systemic breakdown, and if that occurs, the price changes in all asset classes are going to be extreme. Gold and silver bullion and their respective equities are arguably the cheapest assets on the planet today and remain historic safe havens, even if most of the morons in our society fail to realize that fact at the present time. The fact that we are at historic extremes in everything today just reinforces that opinion. I may be underestimating the opposition, but I think they are in deep trouble. I would much rather be playing our hand than theirs at this moment." What do you make of that?
I can't disagree with it. I think John's absolutely right, and I think he summed it up very, very well. I mean, we are at extremes in valuations, both for precious metals and if you like, the more regular investment media. And when I look at what's going on with the US economy, they're continually having to revise down growth expectations. Every anecdotal bit of evidence that comes through, whether it's things like business inventories or whatever, it all indicates that things are slowing down very, very sharply. Now, if you get a real slowdown in the economy, the question then is, what's the next trick they're going to pull? Because the one thing that the Fed really is frightened of is contracting bank credit, and this idea, if you like, of collateral liquidation leading to more selling of collateral by the banks to try and cover the loans, and this sort of self-feeding, nasty collapse, if you like, in asset prices. Now, that's not going to happen because they're going to print money to ensure it doesn't happen. And we are very, very close to that sort of tipping point. And I think that people with who sort of have an understanding of this are not going to hang around and wait for the Fed to print money. They're going to go quite quickly, I think, against the dollar. They're going to assume that confidence in paper currencies is being fatally undermined. And I think so. I can see the extreme valuations in financial securities being hit quite hard, but at the same time, a panic into, if you like, real assets, not just gold and silver, but even possibly commodities. I mean, and we're already seeing the price of oil has begun, against every expectation, to move upwards quite sharply. Now, this tells me that the purchasing power of money, paper money, is actually going down. And that's the thing that we've got to concentrate on.
Did you see that piece that Eric King put out this morning with those 5 charts?
No, I haven't seen that.
Okay.
I haven't seen that.
And it plays right into what you were saying. And he shows with these charts exactly that. And the first one that you come to is the shrinking first quarter economy with a question mark. And he shows that, this is from the Wall Street Journal, that the revised inflation-adjusted GDP for the first quarter was negative 1%.
Right.
And he shows the sharp uptrend in oil purchases, or the oil market, I should say. And then he goes into the credit that you had referenced as well. And the credit in the United States is contracting. The debt, or I should say the debt, not the credit,
Yep.
but the debt is contracting, except with the exception of student loan debt and auto loan debt. Both of those are rising exponentially. How do you see this playing out as far as where we're headed over the course of the next quarter or two, or through the rest of this year? I mean, do you see this just completely imploding? Or?
Well, I think I think that the first thing we've got to look at is the point that you made about contracting bank credit. There is no doubt in my mind that Wall Street is not making money available to Main Street. And if anything, it is trying to get out of lending money to Main Street. So what the Fed does under those circumstances is it expands the quantity of money, of, if you like, narrow money, in order to counteract that contraction of bank credit. We've actually seen this also in Europe. The reason that in the Eurozone that QE was brought in was because bank credit was beginning to contract. I mean, it just wasn't expanding. Low interest rates weren't enough. They actually had to go in there and inject money into the system. So we're going to have QE, I can't remember how many we've had. It's QE5, I think, is the next one, isn't it? So, that's going to happen. I mean, I think without any doubt at all, so long as the economy shows signs of stalling. And that's going to happen. Now, I was very interested. You mentioned auto loans. Something is happening in Greece, which is interesting. What people are doing, because they can't take cash out of the bank, is they're going out and they're buying motor cars or autos. It's the quickest way, if you like, to run down your deposit in a Greek bank. Run out and buy a motor car. And this is fascinating. What we're seeing is something which no modern economist predicted at all, and that is you are seeing a flight out of currency. The flight is out of currency held in banks, into real assets. Now in Greece, the closest thing you get to a real asset is a motor car, a Mercedes car. Ironically, the Germans are leading on the Greeks, but the Greeks are going and buying Mercedes cars and BMWs. I mean, it's you couldn't make it up. But that is what is happening.
Talk about an unintended consequence.
Yeah, and I mean, it's actually a very fine line between that sort of behavior and someone in America going out and buying an auto. I mean, why is he buying the auto? Is he buying the auto because he needs a new one? Is he buying the auto because some slick salesman has persuaded him this is a damn good idea? Is he buying the auto because the auto loans are cheap? Or is he buying the auto because he doesn't actually like the thought of having his cash sitting on deposit in the bank? Now, which is it? I don't know. And I think that it's interesting because you can slip from one into from all the sort of the good reasons, if you like, into the reason that I would rather not have money. I'd rather have an auto than money. And I mean that in the sense that I just don't want money. I don't necessarily need the auto. It's just I don't need the money. You can slip into that sort of way of thinking really quite, easily. And it could be that very quickly we allied into a sort of situation where suddenly the purchasing power of money starts sliding from under us. Now, nobody has protected themselves by buying gold in the West, or relatively nobody. I mean, we're three of the very few nuts around, if you like, who see it this way. But this is an extraordinary situation. These are extraordinary times. And I was fascinated by that Greek story, that they're going out and buying motor cars to get rid of money on deposit in the banks.
I like it. And
it's an interesting one.
It is, and like I said, it was talk about your unintended consequences.
Oh yeah,
just completely freakish that they owe the Germans all this money, but they're buying German motor cars. That's
well, they make very good motor cars. So.
Yes, they do. Yes, they do.
Yeah, but they're expensive to repair, man.
Yeah, but if you can't go around to your bank and take your money out, who cares?
Exactly.
That's true. That's a good point.
I do agree with you, but it's that's actually a very serious point. The auto sales in Greece have taken off. They really have taken off, and that's why it's the quickest way an ordinary person can get his money out of the bank.
Well, I wanted to change gears a little bit. I wanted to kind of look at gold and silver again, and wanted to ask you about the refineries. And I know you're in close contact with the Swiss refiners. And what's going on over there, Alasdair? Are they still cranking 24/7, or what's happening?
I haven't spoken to my refining chums recently, but basically, yeah. I mean, it's 24/7, 7 days a week. The only fly in the ointment is that the Swiss customs can only clear the gold 6 days a week because they have a day off. But no, I mean, it is a continuing thing. I don't think it's going at quite the same pace as it used to. But what was very interesting is that the Swiss refiners have also been taking in Arab gold and recasting it from LBMA 400 ounce 995 into the new Chinese 1 kilo 4/9 standard. Now, and they're taking it back. They're not, recasting it to sell in the market or anything. They're recasting it and there's then sort of shipping it back to storage, which I find fascinating. It tells me that this market is slipping from London, and we've got a bit of a story going on at the moment about the Chinese are now trying to control the gold price, or at least move the gold market very definitely to Shanghai. And the other thing about it is that it tells me that the Arabs really do realize that their future is supplying oil to Asia rather than anywhere else. And by Asia, I mean particularly China and, the sort of, if you like, the Chinese connections. And this is why the Shanghai Cooperation Organization is so important. I mean, we're talking about an economic bloc consuming oil, which will be supplying, if you like, cars and transport and heating for over half the world's population. That's where that oil is going. It's not going, I mean, some of it's obviously going to Europe, but it's not going to America. I don't think any Middle Eastern oil goes to America now. You get a lot from Nigeria. It tends not to go around from around the Cape from the Gulf. So the Arabs see their future with Asia very definitely, and they're recasting their gold to reflect it, which is an interesting point.
Let's back up here a second. When you say that they're taking in gold from the Arabs and then recasting it into, which is essentially the Chinese standard gold bar.
Correct.
And then they're shipping it back to
storage.
To storage on behalf of the Arabs.
Yeah.
Let's just call them the OPEC countries.
Yeah.
That's the reason why I think that's kind of interesting, is because for however long the 400 ounce LBMA bar has been the global trading standard, I wonder if this is going to mark a shift in the standard bar that'll be used for global bullion trading to the, what is it, the 1 kilo Chinese bar?
Yes, yeah, I think that's happening anyway. I mean, I think I'm right in saying that you could probably put me straight on this, that you can deal in COMEX in the 1 kilo bar settlement.
Yeah, I think you're right, because that's what they call it's based on the mini contract.
Yeah,
Yeah,
and also, you know, you got Globex, and I mean, increasingly the world's dealing in 1 kilo 1 kilo bars. So, I mean, it's a huge market, obviously, in China. I think Dubai is going that way as well, though they mainly supply the Indian market. This is not a new story. I interviewed a director of Argor Jerez, and it must have been a good 18 months ago. And he was telling me that then. So this is not something that's new. This is something that's going on all the time.
I mean, in my opinion, it's one thing if the Chinese establish a yuan-based gold fixing off the Shanghai Gold Exchange that competes with the LBMA gold fixing. But it's an entirely different, it's a much more powerful story if you combine that with the idea that it looks like there's going to be a shift away from the LBMA 400-ounce gold bar to the Chinese 1 kilo gold bar. I mean, to me, that says it all right there.
Yeah, absolutely. Well, I mean, London's having to fight a rearguard action on this anyway. I think even if some of the banks hadn't been caught trying to fix the price, front-run clients, and all the rest of it, I think the suspicions in the market anyway would have driven business away from London in the fullness of time. So London had to change. London has been very reluctant to change. I have to say that the bullion banks here sort of think they've got a very nice business, so why change it? And the changes that have gone through on the fix have been mainly cosmetic. We're now getting less information actually out of the London market than we were before, which seems a bit nonsensical. But I think it is a bit more open in London, so that's generally a good thing. But having said that, there's no doubt about it that the market basically is where the demand and where the deliveries go, and that's increasingly going to China.
How do you see that new fix that China has announced that's going to go into place? Do you see that just stripping the LBMA of their fix, or the global pricing mechanism is what I'm getting at? Do you see that shifting to Shanghai?
I think it's shifting to Shanghai anyway, and I think this is just part of it. And I think what they will probably do is they will produce a fix in yuan, but they will also give, as London does, equivalent prices in dollars and sterling and maybe euros. I mean, I would have thought that's the way they will go. I haven't seen any detail on how they're intending to do this yet, but that to me would make sense.
That it does.
Go ahead.
Go on, Dave. Yeah.
I just had one more question. You've been really generous with your time, but I was just curious about your take on this story that doesn't seem to want to go away, that JP Morgan has been accumulating massive amounts of physical silver. And I want to preface that by saying that when I first read that story, I looked at it and I said, well, this theory is being based on data from the COMEX, and I don't trust COMEX data. I haven't trusted COMEX data ever, and I've looked at it for 15 years almost on a daily basis, because in my opinion, the banks have been caught rigging their books and reporting fraudulent information in every other business line, and we know they're doing it in their precious metals business. So why would their COMEX-based reporting be the one part of their business that they decide to report honestly? I just don't buy it. However, having said that, my first reaction when I saw that story was, okay, well, what's this thesis based on? And it's based on looking at the growth in JP Morgan's, the growth in silver being kept in JP Morgan's vault. And as you know, the vaults are segmented into registered silver or registered gold and eligible gold or silver. And the registered is the silver or gold that's available to be delivered on the COMEX under contracts, and the eligible gold is silver is the silver that's being safe kept in the vaults by investors, and we have no idea what the identity is of those investors. Now, my thinking was, well, if you wanted to take the time to go back and look at, the delivery reports do indicate when a bank is involved in making a delivery or taking delivery. The delivery report shows whether it's for the house account and it's designated by an H, or the customer account, which is designated by a C. And this guy, Bron Susheki, who works for the Perth Mint, went ahead and did that exercise. And what he's found is that if you look at the delivery reports, and again, if you believe the delivery reports, it shows that JP Morgan's house account has actually been delivering silver, and the customer accounts have been taking delivery of the silver, which would suggest just the opposite, that it's actually investors who are accumulating silver in JP Morgan's vault. Now, I will also say that I've suspected for many years now that the bullion banks are accumulating physical gold and silver, but they wouldn't do it openly on the COMEX. They would be accumulating it in these new vaults that are over in Asia. What are your thoughts on that?
It's interesting. If I can just sort of take a step back, I've been thinking about exactly what JP Morgan's role in this is, and I think it's something that has evolved a little bit. Bear in mind that China is probably the largest refiner of silver in the world. I can't get hold of any figures as to, to confirm that, but I do know that they do an awful lot of silver and gold refining. And what's important also is that the silver refineries, and the gold refineries for that matter, are owned by the Chinese government. So we're talking about a nationalized industry. And when you start talking nationalized industry, the business is driven not by profit, but for strategic or government reasons or reasons from some sort of ministry. Now, silver is one of those commodities which is very, very important to China. As we know, she's the largest manufacturer of solar panels, etc. And, her industrial uses are more than anyone else. She has got a greater interest in the stability of the silver price than almost any other country. Having the refining capability means that she can get the silver in concentrated form or in doré from abroad, ship it in, and deal with it from there. Now, imagine you're a miner in Latin America, and you basically got to pay your miners and all the rest of it. The man from, an agent from someone like Glencore or Trafigura turns up. He will make an assessment as to the silver content of your concentrate, and he will arrange for two things. He will arrange for it to be shipped in order to be refined, and he will send it to the cheapest refiner, and this is why profit doesn't matter to the Chinese. They want to get the stuff in. So he will probably send it to China across the Pacific. And the second thing is that the manager of the mine is going to want payment up front. Now that's where JP Morgan comes in. Now, immediately, JP Morgan, therefore, are in a sort of a triangular relationship with the mine, which is delivering concentrate, to the refinery, which is the Chinese government, and you got JP Morgan basically financing it. And I think if you put those guys together, it begins to explain why JP Morgan have such a big role in silver. Now, I don't see anyone else, putting this suggestion up. So I'm probably horribly wrong, but it seems natural to me that this is actually what happens. Now, from time to time, I think that there would be quite naturally large amounts of physical silver as opposed to paper, if you like, paper being closed off against paper, but physical delivery actually coming through from China and it being dispersed. And that, I think, would be driven by the market. And the one thing I've noticed with silver, and this is very different from gold, is that the refiners, not refiners, the demand side, the industrial demand for silver is there all the time. If you think about it logically, if you're, let us say, a solar panel manufacturer or something like that, the most important cost variable in your business is the price of silver. So when you see the price of silver dip below a certain level, you think, I better lock that in. And you lock it in basically by either buying futures or taking delivery and storing it somewhere, if not in your own premises, somewhere else. And I think that is what we're seeing. We're seeing those flows of silver, if you like, to some degree. Now, I don't think it necessarily accounts for all the silver going through, but I think that's basically the way one's got to look at it. And this is a very, very big market. You're talking about a lot of physical going through. And I think also that the arrangement of the price, if I can put it like that, is a matter which is probably discussed at least once a quarter between the Chinese government and JP Morgan. Does that make sense?
Yeah, that makes sense. And that what you just said kind of would corroborate my gut feeling that I've had for years, which is that the bullion banks are accumulating physical gold and silver over in those brand new Asian vaults in Singapore and Hong Kong. I guess my whole point was that I don't think that you can make the assertion that JP Morgan is accumulating a bunch of silver based on the COMEX data. And with everything else you said, I read your latest article and I found that research to be fascinating. And it's also you're right, no one else is talking about it. And I think you're onto something. And I think that actually, hopefully that article will get a lot more exposure. Because I think you're dead on with what you just said.
I think it's it is an interesting point, and it does, I think, make sense that the market works that way. It's just such a pity we can't get genuine information on it. The other thing I would say, and I said this in the article, is that this sort of circus works so long as you can control the price. And controlling the price basically means you don't want other buyers in there screwing things up for you. So this I think also explains why when the price ran up to over $45 and got close to 50, my God, they picked their timing very, very cleverly to take the steam out of the market. And they hit it. This was, what, 3 years ago, wasn't it? No, yeah, about 3 years ago.
April 29th, 2011.
Dave, it sounds like it's engraved on your heart.
It is, and my wallet.
And your wallet, yeah. Yeah, me too. But they were brilliantly clever with their timing. They really knew what they were doing with that. Since then, they've really had the field pretty well clear to themselves. If anything, there's been what was net investment has turned into net supply. Not very much, but enough, if you like, for them to get the price down and down and down. And I think that we're now in the situation where the Chinese have probably accumulated enough of a strategic reserve of the stuff that they would be probably quite happy to let things run up now. And the reason I say that is that you've got to think about their strategy in gold. And here we have the new BRICS Bank coming up, and I suspect the new BRICS Bank in about a year or two's time will start looking to issue its own version of the SDR, and guess what? That SDR will have gold in it. Now, that only makes sense if the price of gold rises to a point where it can be controlled at a higher price, as it were. I'm not saying that this is a strategy that's going to work, but I think this is what the Chinese have in mind. The other thing is that the Chinese are looking at a reference price which basically will compensate them for everything that they lose on US treasuries. So I think that gives us a marker price, if you like, of something in the region of about 4,000 ounces plus. If that is right, then the other thing that happens is that with the volatility of silver, you're looking at the gold-silver ratio returning to something more normal, probably in the region of 20 to 25. So I can see the dynamics building, if you like, and the strategic reasons for the Chinese are now about to change, or they will. When I say about to change, in the next 6 months, I think they will probably change. Anybody who's not in the market, anybody who doesn't own their silver or hasn't got their physical silver or gold, I think could well find they miss out. I think there's a big change coming on. This business of JP Morgan running the ring and all the rest of it, it only really works in a bear market. When the market starts moving up, it's a completely different dynamic. Now, that could be one reason why JP Morgan want to make sure that one way or the other, and whether it's in the house account or another account they control, or another account which is a close associate, doesn't matter. This could be another reason why they do want to have some physical silver in there.
I wanted to ask you about the Chinese announcing their gold holdings in light of what you just said, as far as the BRICS Bank coming online with its own SDR and it having some gold associated with it, backed, or however it works out. What kind of number do you think that they're going to have to make to announce to the world in order for that scenario to play out that you just described?
Well, it's going to be a political decision.
Yes.
And the Chinese do not want to destabilize the Western financial system. I think that is very important. That tells me that the time for them to make an announcement would be, if you like, in line with developments at the new BRICS Bank. So in other words, it's not just China, it's everybody else who's involved in Asia with the BRICS Bank. They'll then be talking about their gold reserves. And that is the moment when China will change her official gold reserves. I don't think that she's going to throw all her gold into it. I think that she will probably come up with a figure like 4,000 to 5,000 tons rather than a really big figure. May come up with a bit more, maybe as much as 7.5. But I don't think she would do more than that. I think what she would rather do is not come up with a number which is going to destabilize the Western financial system, because she can always come up with another number at a later date. So I see it as, if you like, as a continuing process. I think that the amount of gold she's got is way in excess of 20,000 tons. I'm talking about the state. I'm not talking about Chinese citizens. Chinese citizens, a further 15 on top of that. So it's quite, we're talking about just a sort of a lifting, if you like, of the veil a little bit, and that's about it.
And you said that, so you feel like that the BRICS nations are going to have to come out the title, and apparently Greece has just been invited to join the BRICS contingency. But as far as the BRICS nations, Brazil, Russia, India, China, and South Africa, they're going to have to make a collective announcement that the gold, that, we've got X number of tons of gold to go into the BRICS Bank to back the SDR. Is that what you're saying?
Yeah, that's exactly what I'm saying. And I don't think they're going to announce a new SDR for another year. I don't think they're planning to do that. So I think that any announcement about the gold reserves, the official gold reserves that these various countries hold, would, unless they're updating it on a rolling basis, such as Russia, I don't think you're going to get an announcement like a Chinese announcement, probably until that moment. I can't see any reason why they should announce it earlier. I mean, from a Chinese point of view, if they make any announcement, I suppose they could say, well, we've got 2,000 tons, but I mean, why bother? There's no point. I mean, it just seems to me that it's far better to tie it in with the BRICS Bank, because the Chinese can then turn around and say, look, it's not us. We're members of this bank. Other people are doing exactly the same thing. It's an agreement to which we are a party, admittedly, but, don't blame us, sort of thing. I think, so that to me is a more natural approach, I think, for the Chinese, rather than to, sort of make a market destabilizing announcement. No, they're not in that game. They really are not.
Yeah, and your number, the 4,000 to 5,000, that's in line with what Eric Dubin is thinking as well. He's thinking that it's going to be just above Germany, but far below what the United States, those two official numbers. And, China's supposed to be making an announcement in June or July. I believe it's in June. Yeah,
well, they may well do, but it's, it just seems to me it would be more natural for them to do it with, with the development of the BRICS Bank. I mean, it could be that the creation of an SDR is a two-stage process. There's an announcement of an intention to do it without saying what it is. And at that stage, you could probably start jacking up your gold reserves. But I mean, I think that BRICS SDR is going to be interesting because it's going to compete against our SDR, as it were, which has got no gold in it at all by law, believe it or not. It's going to be a better SDR. So
let's see.
What I don't
understand
is China has to understand that if they come out with a phony number, especially a phony number that's too low, and I think even 4,000 or 5,000 ounces is a phony number that's too low. They have to know that most of the world, other than CNBC and Bloomberg reporters, are not going to believe it.
Yeah, I think that's a very good point. And you see, the other thing is that I think that if you put yourself in their shoes, they probably say, "Well, what's the size of our economy? What's how does it sort of?" We've got to produce something that is in line, if you like, with some of the better run countries. America says she's got 8,133 tons. Our economy is about the same size. So that could be the marker, which is why I wouldn't rule out a 7,500 ton figure. I mean, I think that's quite possible.
That makes sense.
I will have to say that your work in terms of calculating how much you really think they have, I consider that to be the definitive piece out there, because I think you've done a better job justifying your number than anyone else out there has.
Well, it's nice. Thank you for saying that. It all goes back to the fact that the Chinese do plan these things a long way ahead, and they produce the original regulations giving the People's Bank of China the job, if you like, of managing the gold, the gold program in every sense back in 1983. And it's quite clear that by 2002, when the Shanghai Gold Exchange was set up by the People's Bank of China under those regulations, that the state had already worked out that it had got enough gold for its own purposes. They're also the largest miners. Now, I think they probably dress the numbers in such a way that we all think that domestic mine production is being used to satisfy internal public demand. I don't think so at all. I think that's just spiriting away into government hands. And in support of that, it's interesting because both my refining contacts in China and also our vault storage people in China tell me that they have never ever seen a Chinese refined 1 kilo bar. Now, either none of it gets out. Either none of it gets out because customs are so damned efficient. Or alternatively, the government keeps the whole bloody lot, and I know which horse I'm backing.
Yes, and
I mean, and I know that there are other people who look very, very closely at what the Shanghai Gold Exchange numbers and all this sort of stuff. And they can sort of come up with the figures, and it all looks very, very good. And they know that you've got so many tons being mined, and that if you slot that in, and then you've got the other variable in this, of course, is scrap, and you put all this together, and you've got imports. The figures total beautifully. Well, I mean, I think a government accountant can quite easily get a piece of paper and make the thing total without ever going anywhere near an ounce of gold. I mean, we know this is the way governments do statistics. So, why are the Chinese any different from the Americans? Sorry, I shouldn't be rude about your statisticians.
Yeah, right.
But you can make these numbers up. So the idea of believing what they say is a complete nonsense. What we can believe is that the regulations were in place in 1983, and we can believe that the numbers that come out of the Shanghai Gold Exchange are correct. Anything that comes out of a proper exchange is broadly correct. So we know what's been delivered into public hands, but that's just into public hands. We don't know where it came from, how much has been imported and all the rest of it. I mean, the Chinese are crawling all over Africa. Does anyone actually think that they don't go to Africa and strike deals about taking gold concentrate and dealing with it with their refineries back home? Of course they do. And so, increasingly stuff that's coming out of places like Ghana and Nigeria and West Africa and a lot of the small, conflict gold, if you like. If you want to get rid of your conflict gold, go and talk to the Chinese. They'll handle it for you. So there's all this. I think that they get a lot of gold from all over the place, which we just never ever see. And to assume that they play by the rules, I think is very naive.
I would agree with that wholeheartedly. Well, Dave, do you have anything else, or should we allow Mr. Macleod to get back to his afternoon?
No, I have a lot else to say, but we'll have to save it for next time. We've already used up more of his time than he probably expected.
No, not at all. It's always a pleasure to talk to you. Anyway,
it really is nice talking to you, Alasdair, and we could keep you on for another hour at least, because there's a lot going on, and you seem to cover a lot of the ground that we need to have covered, and it's greatly appreciated. Your analysis, as Dave said earlier, is spot on, and you're just such a pleasure to speak with.
Well, it's always a pleasure speaking to you too, and thank you for your very kind words.
Well, we will do this again in the not too distant future, Alasdair, and Dave. I will talk with you later this afternoon.
That sounds great. Thanks again, Alasdair.
Look forward to it. Thanks, Dave.
Thank you. Bye-bye.
Bye.